Hi guys, welcome to my YouTube channel Let's Invest. The idea behind creating this channel is to share my experience on financial investment with my audience. Um, Many of us have a dream about achieving the financial freedom early in their life, but very few actually get there. As you can see in the tagline, it says anyone can achieve the financial freedom through smart investing. This is very true. And I'm going to share this in my subsequent slide. Now, the question arises, why should you invest? Well, there can be many reasons, but let's understand a few of them. So, with proper investing, you can generate very good returns for yourself. Then you can plan your retirement. I'm sure none of you want to be in a situation where you get to a retirement age only to find that you have very limited sum of money to play with. So you can plan your retirement. In terms of tax planning, I mean, there are many investment options that can help you save taxes. You can beat the inflation. I mean, if you keep the money at home, it is only going to depreciate with time. So if you invest it in good assets, you can actually beat the inflation. And then, of course, you can achieve the financial freedom. I'll present to you a case study just as an example to show you how timely investment can help you generate very healthy returns. And then there can be many more reasons to it. So, what investment options do we have in India? Let's understand this. We have stock market where you can invest your money in public listed companies. You can buy and sell their shares and then generate the return. Then we have a mutual fund where instead of investing directly to the stock market, there are fund managers who invest your money in stock market and then other financial securities. You have a national pension scheme, which is governed by the government of India. Annual basis, you invest some money. This also gives you the opportunity for the tax saving. At the maturity, you get some portion of the money as a corpus to you, and then remaining is then given to you as monthly pension. Then you have bank deposits, which many of us are already aware of because this is a very conventional form of investment. Real estate, again, a very attractive kind of investment, but you have to invest a lot of money to buy the property. Gold is also an option because over the period of time, the prices of gold keeps on inclining. And then there are many more options which I'm not going to talk about here. My primary focus would be investment into the stock market. So, talking about the stock market is actually a place where you can buy the shares of the public listed companies. You can buy and sell their shares and you can generate the profit out of it. Many of the companies who want to raise funds, they go to the general public and then they float their initial public offering, which is also called as IPO, to raise the capital. Let's understand this from an example. Now, consider a company as a big house and the shares as small bricks of this house. So, what happens as the company grows, the value of these bricks, these shares that you hold, also grows. So, I'm sharing one case study with you. This case study is about Wipro, and then this is just used as an information purpose only. It is said that 10,000 rupees invested in Wipro stock about 40 years back would have become 800 crores. Now, this may sound unreal, but it is actually true. Let's understand this by this table. Let's say someone had bought 100 shares of Wipro in the year 1980. Back then, the face value of each Wipro share was 100 rupees. I mean, nowadays, normally when a company releases their IPO, they keep their face value as 10, some keeps 2 and 1. So what had happened in the year 1981, this company declared a bonus of 1 is to 1 ratio. Now, what does the bonus share means in a 1 is to 1 ratio? So, what happens in the bonus share, the face value of the share doesn't change. 1 is to 1 means for each share that you hold, the company will give you one additional share. No change in face value. So in 1981, those 100 share became 200 shares. Again, in 1985, Wipro announced a bonus in the same proportion, 1 is to 1. Those 200 shares became 400 shares. In the year 1986, the company announced a stock split. So the face value of 100 is now reduced to 10 rupees. So what happens in the stock split? The share value of share also splits. So for each share that a shareholder is holding, it would split into 10 small shares. And guys, so those 400 shares after the stock splits became 4,000 shares. And this story of bonus share and split kept on continuing. And in the year 2017, those 100 shares became 1 crore 92 lakh shares with a face value of rupees 2. And guys, this is an exercise for you. Go and see what the value of one share of Wipro is as of today. So that is the power of share market. And this is not just it. During these 40 years, the person also gets the dividends which are announced by the company on a periodical basis. So this is just an example. Not every company is like Wipro, but yes, there are many stocks which I can tell you about that has announced bonuses, the stock splits, and then their share value increased significantly over the period of time. And guys, finally, some really important points when you intend to invest in the stock market. First and foremost is start early. The more number of years you give to your investment, it is going to grow significantly with the power of compounding. Invest in a small proportion of your income. Again, this might be risky. So when you start investing, when you're still a beginner, just make sure that you invest a very small portion, let's say 5%, 10%, or whatever is your risk appetite. You start investing. Be consistent and disciplined. You have to be consistent. You have to make sure that you invest month after month and give yourself as much time as possible. One more very important thing, do your own research or seek professional advice. Don't go by what others say. Make sure that you feel comfortable with the stock where you are investing. But if you are unsure about that, make sure you seek the professional advice. And as I mentioned earlier, it involves risk. So make sure you take only the risk which you can tolerate. And finally, pick the stocks of the good businesses. Make sure that you do a good research, first of all, about the company, what they do, how their management is, and what is the future prospect of the business. And then only you invest. Well, I think this is what all I wanted to share today. If you like the information, please do like and subscribe. This will encourage me to keep coming up with this kind of a video for you in future. I'll be doing a lot of stock related analysis. So please guys, stay tuned. Thank you so much for watching my channel. Have a good one.